Welcome to the May update of Arctic Aurora LifeScience. Today we have a very full agenda. It's a lot happening in the sector. The agenda will be that we start as we normally do with sector sentiment and comments on the fund performance. We will look at the top and bottom contribution of May. But then we have a lot of information regarding ASCO, a very important scientific oncology conference, and we have other news flow as well. And last but not least, we will present to you the new fund we are launching, which is a pure biotech fund that we are extremely excited to be able to launch. And we believe it's a very good timing to launch it right now. So, looking at the market and the subsectors, this is a chart that we have included in the other monthly presentations. The green line is Nasdaq Biotechnology Index. The blue is showing the large pharma companies, and the black is the general market as expressed by the S&P 500. And this chart starts year to date 2021. And as you can see, we had from March in 20, of course, since the outbreak of the pandemic. So anyway, as you can see, this strong performance of the biotech sector continued up until February this year. And as we also have commented on in the other monthly reports, we have seen a correction in biotech caused by investors' appetite for more recovery stocks. And this has actually led to that now you can see that the Nasdaq Biotechnology Index is actually below the general market, and the rotation has erased some part of the strong performance in 2020. However, what we also see now is it seems like the sector is stabilizing, and we believe it's a very attractive situation now for biotech investors. We can see the blue curve is fairly stable, but looking more in detail, actually the large pharma companies had a very strong performance, being quite stable. They were up almost 4% during May, and that is due to the effect that the Biden administration did not include drug price reform as a financing tool for the infrastructure program that they released by the end of April. So all in all, we can see that the healthcare sector is actually stabilizing in a good way, and we believe, as I said, it's a very attractive timing to invest in biotech now. These different subsector movements has, of course, impacted our fund, and as you know, we focus a lot on biotech, so this fund, we were not able to beat benchmark. We were up 0.7%, but the quite large pharma heavy benchmark was up more 3.1%. We still have a very healthy outperformance though, looking at a longer period. If you look more in detail in our contribution to the month, this also follows the same picture as I showed in the graphs, that the large pharma companies have contributed the most, and also actually one of our interesting and very attractive investments in BioCryst Pharmaceuticals. On the bottom, we have Novavax that we haven't commented on, and we have Iovans, Atea, Affymed, and TG. And I thought, Daniel, why don't you comment on the biotech companies in the bottom?
Yeah, certainly. Thanks, Ulrika. So with regards to Novavax and their COVID-19 vaccine, the company announced certain manufacturing delays during the month, which accounts for the drop, quite considerable drop in share price for that stock. Of course, as we may know, Novavax has gained tremendously during the last year or so. And even this year when they presented positive phase 3 data in a UK study. Worth mentioning is, as we're recording this after the start of June, is that Novavax have recovered slightly on the prospect of their larger US and Mexico study that's about to read out, hopefully any day now. I will address Iovans in a couple of slides forward. Atea also sort of a victim of let's call it a COVID-19 rotation, where vaccine has been doing pretty well, whereas therapeutics, where Atea is involved, has not done so well on the prospect of more and more people getting vaccinated. I don't think there's any fundamental changes in Affimed and the TG stories, other than that these are also been pretty well-performing stocks of late and had a slight pullback during May. So if we continue onwards with some of the events of the month, I think we begin with noting 2 very interesting new drug approvals by the US FDA. To begin with, Amgen's targeted cancer therapy for a protein known as KRAS. We've discussed this in previous monthly reports. They're honing in on a specific mutation in this cancer-driving protein and have had very interesting clinical results. So FDA granted an accelerated approval for Amgen, actually 2 months ahead of its so-called PDUFA date, or FDA decision date. That kind of signals the importance of this drug to the FDA. It wasn't a huge stock move for Amgen. I think it was mainly flat during May, but I think for cancer therapies and targeted cancer therapies, this was an interesting signaling event. Apellis, a new portfolio holding of ours that we invested on ahead of the FDA decision, got approved on May 14th for a rare autoimmune disease known as paroxysmal nocturnal hemoglobinuria. Pretty difficult, complicated name, but this disease became famous, so to speak, with the introduction of Alexion's trailblazing drug Soliris. That was the first drug to really target and have a sustained effect on these patients, in which the immune system starts attacking red blood cells, and that's never obviously good news for anyone. Soliris managed to increase actually survival rates that we see now in long-term data, and also increase the rate, decrease the rate at which these patients need blood transfusion. Now, Apellis sort of tops this data. In their phase 3 trial, they were superior to Alexion's Soliris, and also actually got approved in the drug label that FDA approved for Alexion's follow-up drug called Ultomiris. So patients are free to switch to Apellis' drug. And also those that are treatment naive, which was a sort of a bonus on the label, because that was not included in the previous clinical package. And to add to this, during the month, Apellis also published data from its longer-term study, which shows a good sustained effect. So an interesting prospect with this new drug product for Apellis Pharmaceuticals. And also worth noting, as we're now almost halfway through the year, that new drug approvals by the US FDA are very well in line with previous years, and I dare to say a very high rate of new drug approvals. We're in sort of the 50s on average for 2021 year to date. So it follows an increasing trend of more and more new drug approvals. So if we switch to next slide, also making a sort of case of recently approved drugs. 3 companies that are sort of in launch mode right now. And we mentioned BioCryst, and the reason for their uptick this month was good sales numbers for their first full quarter at the market for their drug Orladeyo for hereditary angioedema. And this is the first oral drug that treats these patients. So we've seen a very good market uptake there. That stock moved 36% up during May. Y-mAbs, we've discussed that in previous reports as well. Their new neuroblastoma drugs for children reached sales at $5.4 million US, and that was not a full quarter of sales. So we saw an uptick on that stock as well due to market launch. Aurinia's launch were a little bit more, let's say, difficult. It was only 8 weeks worth of sales for Aurinia and their lupus nephritis drug, but it came well below analyst estimates, and the stock pulled back considerably on the day. However, it recovered quite nicely and actually ended the month up 9% due to new long-term data with their new drug, which hopefully will spur market uptake in the coming quarters. So drug launches can be a bit difficult. Aurora showed that. However, we also see some positive signals from Biotech and Y-maps that innovative drugs actually pays off in terms of the commercial outreach. So on the next slide, we have the ASCO 2021 meeting that takes place in June, early June this week at time of recording. We did, however, see abstract releases already during May that had some effect on some of the stocks. Allogene had actually a big sort of R&D day on top of their ASCO abstract data with off-the-shelf cell therapy, which is sort of different from the currently available cell therapies where you need to take cells from the patient and then reintroduce them. But if you have donor cells, that process can be much more efficacious, more sort of quicker. And in terms of efficacy, it looks like it's on par with those so-called autologous treatments. Merus, a targeted oncology company, showed an interesting response rate in pancreatic cancer. That alone is quite some news because pancreatic cancer is a very difficult cancer to treat. Its targeted approach left some questions on other cancer types, so we'll see more data during the actual conference. Iovans Therapeutics had some very interesting combination data. But the case is a little bit more than that, and we'll come to that in the next slide. Oncternal, some interesting data in lymphoma. We'll see a lot of data from AstraZeneca and Daiichi Sankyo, both on their existing drug and HER2, and with a new antibody drug conjugate that showed some interesting abstract data in breast cancer. That's a competitor to Gilead and their program that was acquired through Immunomedics, if you recall. And then Sanofi, we've been looking for sort of the next step in their corporate development, and they have a new breast cancer drug that showed some interesting effects in the abstract. So we're also looking forward to the full data at the actual conference. But anyway, very interesting news flow in terms of new cancer data coming up from ASCO, and we'll be waiting for more. Now on to, I think the next slide is Iovans, because this was a bit of a roller coaster, and you can see from the stock chart showing the May share price development, there were some pretty dramatic events. So just quickly to get some context. So what Iovans is doing is cell therapy towards cancer. However, the only thing that you're doing here is actually finding out T cells that are harbored, that are actually found cancer cells, but for some reason have not attacked cancer cells. So if you do a biopsy, take out a piece of a tumor, you will find these T cells. So what Iovans found out is if you can enrich those T cells in a lab and activate them, and then grow them in a lab and then push them back into patients in huge numbers, you can actually have a pretty profound cancer effect. And they've shown that in melanoma and cervical cancer, and some cases in lung cancer as well, in only monotherapy. So very promising. However, FDA do want some quality in the products that companies are releasing from their manufacturing. And the difficulty here is that this is not a targeted therapy. For example, other cell therapies within cancer have some sort of genetic transformation in the cells that you extract from patients, so that you can test if you've done your manufacturing right by see, for example, if these cells are binding to the target that they've been transformed to target, if that makes sense. With Iovans, we don't know. It's been these are cells that are extracted from patients. They have not been transformed in any way. So that quality assessment, if the cells are potent enough, is a difficult issue. And in October last year, Iovans announced that they couldn't reach an agreement with the FDA in their sort of pre-filing on how to test these cells, and added a pretty sort of rough 2021 timeline. Now on May 18th, post-close, they announced another delay in the application and said, well, this is probably a 2022 event now, when they have this issue cleared. And you can see sort of the first in the stock graph, the first sort of drop in share price, which was bad enough. I think it was down something like 17 or 20%. And then midday, from an SEC filing, not a press release, the company announced the departure of the CEO, which just spurred the question marks around this company, and the stock fell 40%. And that obviously was not a good development in that company. However, from a clinical development perspective, this is still a very interesting approach. And what Iovans announced post-close on May 19, you can see a bit of an uptick in the stock graph as well, is that when you combine the cell therapy with existing immune checkpoint products, Keytruda being the very famous one from Merck, you see a very interesting 86% response rate in lung cancer patients, which is unheard of with any treatments. Bear in mind, small number of patients. I believe this was 7 patients. So obviously we need more data on this, but the signs here are very positive in terms of the clinical development. On the regulatory side, on the manufacturing side, a lot of questions still remains. So that explains why Iovans performed the way it did. So moving on, we can look forward to a very, I dare to say, hectic June, perhaps July as well. I mentioned the ASCO, the actual meeting for ASCO will take place starting June 4th. And then about a week later, we have the European Hematology Association meeting. So blood cancer drugs, for example, will be showcased here, and also other sort of blood diseases like sickle cell, for example. It's a big one right now in terms of drug development, hot space. We still have not seen the new FDA commissioner named, and this has perhaps a sort of a spillover effect in the perhaps major event of June in terms of biotech and biopharma, and that is the approval decision or not approval decision for Biogen's Alzheimer's drug aducanumab, which we recall did not have sort of stellar data, but obviously Alzheimer's is a big medical need, and no one can be really sure what the FDA is thinking here, whether to approve it besides some weaknesses in the clinical data package, or if that simply is not quality enough for an FDA approval. Biogen is also involved in another important readout, one they shared with Sage Therapeutics, that they now co-develop a drug called zuranolone in phase 3 that previously had a phase 3 failure. They have another shot on goal with data expecting very soon. Vertex has an important phase 2 data announcement because of the sort of signal value in what's next for Vertex. Obviously a huge dominating player in the cystic fibrosis field that earned Vertex one of the sort of top spots in terms of market cap for biotech companies. Everyone now is looking forward. The next step for this company will see data in a rare disease called alpha-1 antitrypsin deficiency somewhere in June, perhaps July. Mentioned Novavax, their phase 3 study in COVID-19 in the US and Mexico study is imminent. So is Gensight's gene therapy study in a rare blindness disorder. And then we'll be expecting a lot of data releases from, I mentioned AstraZeneca and Daiichi. Also Genmab and AbbVie have a couple of interesting projects together. Regeneron and Amgen with updated data on their KRAS inhibitor that's now approved. Fate Therapeutics, another cell therapy player that we're eagerly awaiting data from. So a very interesting news flow, I'd say, during June, which leads us on to the new biotech fund, Ulrika.
Yes, thank you, Daniel. And again, it's fantastic with the innovation in the sector right now. And as Daniel commented on, we have an intense news flow in the coming weeks in oncology. But we are also convinced that oncology is one of the strongest areas in the coming years to come, with a lot of innovation. And there are many other disease areas where the medical need is huge and there is no treatment. So behind all these data flows or milestones that Daniel describes, there is actually groups of patients waiting out there. And I think that's really important. And it's really important also that in the same way that the biotech companies actually solve the problems for the world in terms of the pandemic and the corona pandemic by coming up with vaccines in such a record time. That's in the same way the biotech sector is providing innovative treatments to other unmet medical needs, and this is something that will stay, and I think will even increase, because we are just in the beginning of this new sophisticated way of making new treatments and drugs based on all the science that the companies have undertaken the last decades in terms of biology, but also in terms of equipment. So it's a super interesting sector to invest in, and we have been looking at our performance of Arctic Aurora LifeScience and looked at the subsector biotech, where we know that we had a very strong performance, and looking at the carve out of our biotech investments of the existing fund, that carve out is up more than 100%, 112% actually since start. And we've been very successful in biotech, and we've been good in selecting, for example, takeouts, and good in selecting emerging companies with inflection points. And if you look at the performance of our biotech investments, they have yielded an annualized return of more than 16% a year. And if you look at Nasdaq Biotech Index, which is the normal benchmark in this, when you compare biotech performance in funds, that fund is up 74% as compared to us, 112%, and the annual return for the index is 11%. So we are actually on an annual basis outperforming Nasdaq Biotech Index with 5% a year if you look at the biotech investments as a standalone. Now, it wasn't a standalone fund, so it's not a perfect comparison, but it has at least given us confidence in evaluating if we should start a pure biotech fund, because we believe in the science, we believe in the innovation coming. And now, with the correction we have seen in the beginning of 2021, we see that in our view, it's a fantastic timing for us to start. So based on this outperformance, we are now launching our fund. And maybe, as I said, maybe this is the perfect timing, or at least we believe it's a very attractive timing. Here you can see a slide from our collaborators, Jefferies, and that shows that after corrections of biotech, this is XBI, it's an equally weighted biotech index, giving quite a big picture of the sector and specific emphasis on the small mid-cap segment. But after corrections in this index, we have seen an increased M&A activity in biotech. And as you might recall, this is one of the value drivers in the ecosystem in pharma and biotech. So after the corrections in 16, 17, we saw a significant number of M&As and takeouts, and the same after the correction, the tech correction in 18, that also drove biotech down. In January, we remember very clearly we had two very good takeouts, Loxo and Celgene for our fund. And now we have seen this historically significant correction based on the fact that investors have turned to, as I mentioned, recovery stories, but also based on some debates going on whether FDA, whether there was a problem with the process in FDA, and I think Daniel mentioned it has been, that question mark has been straightening out. We are waiting for a commissioner to be named, and that will be soon. And valuations have come down. So M&A could be a trigger to increase or to improve sentiment for this sector. And as you also might recall, we have mentioned it before, in the Arctic Aurora LifeScience Fund, we have had 13 takeouts in those 5 years. And this graph shows how attractive bid premiums that means to the fund and provides excessive returns. So the first takeout we had even 162% of premium, bid premium on existing price, and attractive premiums all through the deals. So coming back to the slides that I showed in the beginning, here I have included also the XBI, as I said, reflecting further the small mid-cap segment of the biotech sector, and the small mid-cap are of course the target companies when pharma is buying biotech companies to source their pipelines. So looking at the upper right graph, you can see the MBI index, the same graph as I showed in the beginning. You can see the correction, and actually looking at the PE valuation of big biotechs compared to S&P, they are now trading at 30% discount on a PE level for next year's earnings. And in the bottom right, you can see the XBI index in purple, and you can see the correction that has taken place this year, as I mentioned also before, 28% down from the top. So it's clearly a very attractive situation for us to launch in, we believe. And it's also more attractive for big pharma companies to come in and get an interesting or attractive return on investment when buying those companies. So do they have a need for replenishing or renewing pipelines? Yes, they do. Here we have a table showing the big US pharma companies' top 3 selling drugs, of which you can see that AbbVie and Bristol Myers, for example, have quite a big patent exposure in their portfolios. AbbVie stands out with Humira, selling more than $20 billion in one single drug. And that patent goes off in January 2023, and it is 37% of AbbVie sales even after that they did this huge acquisition of Allergan before. But in general, you can see that the big pharma companies do need to renew their pipelines, and they do that by either licensing in or buying biotech companies. So we think this is an attractive timing to start the new fund. The new fund will focus on biotech companies, all sizes. We will have a balanced portfolio of smaller mid-cap companies, all sizes up to the big biotech companies. So if you compare it with the fund Arctic Aurora LifeScience, you can see the lower left is the Arctic Aurora LifeScience fund, where we also include big pharma investments, but the new fund will be the upper left, that is pure biotech. And we also have received a lot of investor, you can say, requests. Why don't you launch a pure biotech fund? And this is now we do that. So to summarize the new fund, it will be focused on the global biotech sector. It will provide investors exposure to leading companies, leading the development of modern science-based medicine on a global level. We will manage it in the same way as with the Arctic Aurora LifeScience, with a risk-diversified portfolio of best-in-class biotech companies. The structure will be a transparent UCITS fund structure and with daily liquidity. It will be the same team that manages Arctic Aurora LifeScience, and as you might recall, now we are 4. And we believe it's a very good, attractive timing to start this fund because of that prices have come down. And as you have heard during this presentation, innovation in the sector is stronger than ever. So with this, I just would like to say thank you for watching and have a great June.